You know that feeling right out on the road, maybe wondering what 2025 is actually going to look like for trucking.
Yeah,
Are rates going to hold? What about jobs? There's just a lot of uncertainty floating around.
absolutely. And look, it's completely understandable to feel that way. There's so much chatter out there.
Yeah.
What we want to do here is, cut through some of that noise.
Yeah,
Really focus on what it means for you sitting in the driver's seat.
exactly. We've been digging into a whole bunch of different sources, stuff on rate hikes, the CDL job situation, predictions about freight bouncing back,
Right.
and even how tech like EVs and AI is starting to, well, shake things up. Think of this as a way to get the big picture without having to wade through it all yourself.
Yeah, and we're looking at how all these pieces fit together. But
Yeah.
they're not separate issues, are they?
No, not at all.
Rate changes, job markets, tech shifts, they all connect.
Yeah.
They impact your day-to-day.
Mm-hmm.
So we'll get into those rate increases people are talking about, what's happening with CDL jobs. Will a freight rebound actually help you?
Yeah, and how things like, digital load boards or even electric trucks might change your routine.
And we can't ignore the news about some companies facing tough times, the
Right.
insolvencies.
Right. So our goal here is really just clarity. We want to offer different viewpoints. Hervey from Life as a Trucker always says you got to see things from all angles.
That's such good advice.
And ultimately, it's about empowering you, giving you the info to navigate what's coming, understanding what you can control.
Like your time.
Exactly. How you use your time, how you build for the future, even when the industry's shifting under your feet.
Okay, so let's jump right into those rate hikes then. Covenant Logistics, they've announced they're planning increases for 2025.
Yeah, what was it, like 2 to 3%?
2 to 3% in the first half, yeah.
Uh-uh.
And then another 2 to 3% planned for the second half.
So the first thought might be, great, more money coming.
That's the initial reaction, sure.
Yeah.
But it's usually more complicated than that. Covenant's reasoning is their own costs are up. Driver pay, maintenance, insurance, it all costs more.
Right. And they're expanding their dedicated fleet, too, which isn't cheap.
Exactly. So the rates go up for the shippers who hire Covenant. But what does that actually mean for the driver?
Well, it could mean shippers tighten their belts somewhere else, couldn't it?
Precisely. Which could hit your bottom line. Things like fuel surcharge adjustments maybe aren't as favorable.
Or bonuses get smaller or harder to achieve.
Yeah. Got to look at it from different perspectives. Covenant needs profitability, needs to keep shareholders happy. That's their angle.
Okay.
And you got the shippers, they're paying more now. So they'll be looking super closely at their budgets, trying to offset that cost.
And that pressure, unfortunately, can trickle down.
It often does. Less generous bonuses, maybe more pressure on mileage, without the pay really reflecting it. Doing more with less, basically.
And what about the impact of dedicated freight? That provides stability, maybe, but does it limit other opportunities?
It can. Stability is good, but you might miss out on potentially higher paying spot market loads and maybe less leverage for pay raises if you're locked into a dedicated contract.
So how's the rest of the industry likely to react to these kinds of rate hikes?
Well, you'll probably see shippers pushing back, trying to negotiate. Smaller carriers might see an opportunity to undercut the bigger guys to grab business.
Uh-huh.
Brokers could get even more aggressive on rates trying to maintain their margins.
Which could mean what? Temporary dry spells for drivers, harder to find good loads.
Potentially, yeah. Or just needing to hustle harder to keep your income steady. The key takeaway is those shipper rate increases don't automatically mean more money in your pocket.
Okay, so it's not a direct line at all. What should drivers be doing then?
Keep a close eye on the spot market. See what those immediate higher load rates are doing.
Right.
If they soften or there are fewer loads, that's a signal. And importantly, negotiate. Don't just assume a raise will happen because shipper rates went up. Advocate for your share.
Good point. Be proactive.
Yeah.
Okay, let's shift gears. This idea that the CDL Gold Rush might be kind of over in 2025. I know a lot of folks got their CDL thinking it was a fast track to good money. What's the reality now?
Yeah, that perception is definitely hitting some turbulence. A few things are happening at once.
Like what?
Well, freight rates, particularly on the spot market, they're weaker. A lot of freight's locked into contracts. Brokers are pinching pennies.
Okay.
And at the same time, your expenses are probably up, right?
Yeah.
Fuel, maintenance, insurance, truck payments.
Yeah, they definitely take a bigger bite.
And those juicy sign-on bonuses or mileage incentives, they might be harder to get or, not quite what they seem.
How so?
We hear about sign-ons paid out over ages or mileage targets that are almost impossible with current dispatch realities. So yeah, the easy money idea Probably gone. Your CDL is now a ticket to a much more competitive game. You got to hustle smarter.
And part of that competition is just more drivers, lots of CDL schools pushing people out.
That seems to be part of it, yeah. Combine that with freight demand, maybe not growing quite fast enough.
And you get more drivers chasing fewer miles, which pushes pay down.
Exactly. And it's not just market stuff. You've got regulations, emissions, ELD crackdowns.
Oh yeah, the ELDs are getting tighter enforcement.
Right. Plus company policies like speed limiters, forced dispatch sometimes, surprise chargebacks. It all adds to the pressure cooker.
So how are the veteran drivers handling this? The ones who've seen cycles before?
It's interesting. Many are planning ahead, saving more aggressively, looking at skills outside trucking.
Like what kind of skills?
We hear about AI, online businesses, dispatching maybe, or finding specialized freight niches that still pay well. And side hustles? Definitely side hustles.
Building income streams that aren't just tied to the truck.
Precisely. It's about creating options.
So the message isn't don't get a CDL, but more like know what you're getting into. It's not 2021 anymore.
Absolutely. It requires grit, adaptability, and being really smart about your career moves. It's a grind.
Okay, let's talk about some potentially better news then. The ATA, American Trucking Associations, they're projecting a freight volume increase for 2025.
Yeah, about 1.6% they predict, and they see continued growth out to 2035, both in volume and revenue.
After talking about flat rates and competition, that sounds pretty good.
It does offer some hope, yeah. In theory, more freight means more work.
More demand could mean better pay eventually, more stability.
Could. That's the key word. But remember those rising costs for carriers we talked about?
Right. Fuel, insurance, maintenance.
They might prioritize using any extra revenue to cover those costs or raise shipper rates before boosting driver pay significantly.
Ah, okay. So the benefit might not flow directly to the driver, at least not immediately.
And there's another factor. If the market really picks up, you might see carriers who park trucks bring them back online.
Increasing capacity again.
Which increases competition and could cap how high driver rates go. And, the overall economy is always a wild card.
So, optimism, but tempered optimism. Let's look at the perspectives again. Carriers see potential for more stable business.
Right, revenue growth.
Shippers might get better service, maybe more reliability, but likely pay more for it. And for you, the driver, there's potential there, more work maybe, possibly better pay down the road, but you can't just wait for it to happen.
Exactly right. You need to be proactive to actually capitalize if this rebound happens.
How? What does being proactive look like?
Staying flexible is key. Willingness to haul different types of freight maybe opens doors.
Okay.
Keep learning, understand the tech, the regulations, and seriously, start building those side income streams now. Don't wait.
Good advice. Network too.
Definitely. Build relationships with brokers, dispatchers, market yourself effectively. The opportunities might increase, but you got to go get them. Negotiate your share.
So it's about positioning yourself. Don't just ride the wave, try to steer.
That's a great way to put it. Be ready to steer.
Okay, let's pivot to technology. Truck Stop's predictions for 2025. They mention digital freight platforms, EVs, sustainability, AI. These are hitting drivers directly.
They absolutely are. It's a lot of change happening fast, and it can feel overwhelming, but getting a handle on these trends is crucial.
Let's break them down. Digital freight platforms first. More app-based booking.
Yeah, expect even more loads booked through apps and online marketplaces. Real-time connections between shippers, brokers, carriers.
Sounds efficient. Instant access to loads.
Potentially, yeah. Less downtime, maybe. But the flip side is fierce competition. Everyone sees the same loads. So you really need to master these platforms, understand how they work, how algorithms might prioritize things.
Learn the tools. What about electric vehicles, EVs? We hear more fleets are investing.
Definitely. Big push there. The lure is lower fuel and maintenance costs long-term.
And for the driver, what's the experience like?
Smoother ride, quieter. That's a plus. But range is still the big question mark, right?
Yeah, especially for long haul. And charging infrastructure.
Still being built out. It's a work in progress. But interestingly, there's talk about maybe different pay scales or bonuses for EV-qualified drivers.
Okay. So maybe worth learning about EV basics.
Couldn't hurt. It's coming. Then there's the sustainability push.
More regulations, shippers wanting lower emissions.
Yep. More focus on fuel efficiency, idling times. You might see more emissions-related inspections.
But maybe opportunities too. Eco-driving bonuses.
Potentially, yeah. Some carriers might incentivize that.
Yeah.
But also expect more paperwork, tracking compliance. Staying green is becoming part of the job description.
Okay. And finally, AI and automation.
AI's role is growing. Load matching, route optimization, predicting delivery times.
Sound like it could make things more efficient. Better routes, more accurate ETAs.
That's the goal.
Okay.
But it might also mean less back and forth with dispatchers. AI systems might just assign loads and plan routes more often.
Less human negotiation.
Possibly. So learning to work with these AI systems becomes important. These tech changes aren't maybe someday, they're happening now. Adapting is key.
Right. Now, something a bit more worrying. This trend of trucking company insolvencies seems like it's picking up steam heading into 2025.
It is a serious concern, yeah. It really highlights the financial pressures in the industry right now.
What's driving it?
Several things we've touched on. Those rising operational costs, fuel, insurance, maintenance are huge. Labor costs, too, even with shortages. Hiring and keeping drivers costs money. Plus the regulatory burden.
And the soft freight market we talked about.
Yeah.
Low rates, too much capacity.
That's probably the biggest factor right now. It squeezes margins really thin, making it tough for some companies to stay afloat.
And we've seen it's not just the small guys, right? Some bigger names have hit trouble too.
Exactly. Which shows how widespread the strain is. And for drivers, the immediate worry is job security.
Yeah, if your company goes under, suddenly you're out of work looking for a job in what might be a tough market.
It's a real risk.
Yeah.
The industry might talk about consolidation, stronger companies buying weaker ones.
Right.
But for the driver caught in the middle, it means uncertainty about paychecks, scrambling for a new position.
And you don't think this is just a temporary blip?
It feels more like a fundamental shift. Some companies just won't be able to adapt to the new cost structures and market realities.
So for drivers, it means being more careful, doing homework on potential employers.
Absolutely. Be aware of the financial health of who you drive for or who you're thinking of driving for. Do your research. Be proactive about your own security. This isn't just a dip, it's a changing landscape.
Okay, so be discerning, be prepared.
That sums it up well. Stay informed, stay proactive.
So as we wrap this up, it's really clear, isn't it? All these things, rate pressures, job market shifts, tech changes, economic realities, they're all tangled together.
Completely interconnected.
Yeah.
And they all land right in your lap as a driver.
And like Hervey from Life as a Trucker says, seeing it from all sides, the carrier view, the shipper view, and especially your view is so important.
It really helps you understand why things are happening, not just what is happening. Gives you context to make better choices.
And even with all these big external forces, you still have agency, right? You still have control over some things.
Absolutely. Your time is maybe the biggest one. Not just your driving time, but your off-duty time.
Using that downtime wisely.
Yeah. Learning new skills. Seriously, exploring those online income ideas we mentioned. Retirefromtrucking.com, truckersidehustle.com. Good places to start looking.
Building that long-term security so you're not solely reliant on the truck.
Exactly. It's about investing in yourself. The industry is changing, no doubt about it. But your skills, your dedication, that's still incredibly valuable.
So maybe try to see these challenges less as threats and more as prompts, opportunities to adapt.
I like that. Prompts to adapt, to innovate, to build a more secure future. Take those proactive steps. Stay informed. You deserve to be respected and supported in this industry.
Well said. Keep learning, keep adapting, and keep building your future.